Nick Tavlarios, president of Aegean Marine. Your stock has really taken a hit over the past year, down about 50%. What's behind it, and what are your expectations for the rest of the year?
Yeah, I consider that a disconnect on the company's performance and where the stock actually trades at. I mean, our firm is in 2011, through 3 quarters of results, you could see we had roughly $59 million in EBITDA. It's been a profitable year through those 3 quarters, and I expect the 4th quarter results to be coming out shortly. So we're a successful company, yet the stock reflects a company that may not be so successful. I think it's impacted perhaps by the misperception that being a Greek company or a Greek name, people think that we're impacted by Greece, which we're not. That's the furthest thing from the truth. And then over and above that, I think the maritime space, where our customer base has had its difficult headwinds. We're doing well, others may not be. And people sort of make that disconnect and automatically throw us into that same basket.
So where are you seeing the greatest growth right now? You're expanding into Panama, right?
Yeah, we just opened up in Panama in 2011. We've commissioned our storage space there, and we're doing quite well with it. We're actually at both ends of the canal. We think that's going to be a great market for us. The Panama Canal, as you know, is going through its expansion, so we have some great aspirations for what will come out of that Panamanian market.
One way to refer to Aegean Marine is as floating gas stations. Tell me, how are you impacted by a higher price for oil?
Well, a higher price for oil has its positive impact on us and its negative impact. The positive impact is it gives us the ability to capture more market share since we have far more liquidity than our competitors. So we're able to pick up some more business. It's negative for us from the perspective we pick up some interest expense on our working capital, and maybe the consumption of our own fleet. But otherwise, it's closer to neutral than anything.
Speaking of your fleet, how many ships do you have right now? And are you looking to add any over the course of 2012?
We have roughly 70 vessels operating in the bunkering trade. We're picking up 1 new build of delivery now at the end of this quarter. That's it. We're not adding. We're looking actually to get rid of some of the older stuff that we have left in our fleet. So we have a fully modern double hull fleet.
So finally, is the world overshipped right now? Not just in what you do, but I'm talking about dry bulk shippers and container ships. Are there too many ships out there?
I think so. I think what you've seen happen in the tanker space lately is the tankers are starting to actually recover because owners have taken advantage of some of these high steel scrap rates, and they're scrapping some of their older tonnage. You'll probably see that move on into the dry bulk and container industry, and when that happens, I think you're looking at a good recovery. So they'll be able to deal with the new deliveries and actually trade and commit and use their newer vessels rather than the old ones, and the old vessels will go off to scrap.